Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a company that hopes to give you a better life, hopefully not by needing their medicine. We're looking at BetterLife Pharma's latest filing, so let's see if their financials are as promising as their name suggests. This report paints a picture of a company still trying to find its footing, with no revenue, mounting losses, and a big question mark over its ability to keep going. Buckle up, because this one is a bumpy ride. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these findings with other finance enthusiasts. First up, this is their annual report covering the year that ended January 31st, 2025. The company we are analysing today is BetterLife Pharma Incorporated in Canada. As of May 30th, 2025, they had a little over 145 million common shares outstanding. That's a lot of little pieces of the pie. They are incorporated in Canada, which might affect how US investors can sue them, something to keep in mind. Interestingly, the board of directors says that none of the members of their audit committee qualifies as a financial expert. This might raise some eyebrows. Now, the big issue, reading their financial statements, we can see a big warning. The company hasn't earned enough money, has a large deficit, and this raises substantial doubt about its ability to continue. This is serious, folks. It's like a flashing red light saying, warning, company may not survive, this risk is not new, and BetterLife needs to find more funding or make money soon, or they might have to close shop. Let's dive into the numbers. They had no revenue, which is obviously zero, and their net loss was roughly $3.6 million. It was about $0.030. Those losses are getting worse. 3 share loss per share from roughly $2.9 million. So their losses are getting worse. Looking at their balance sheet, their total assets barely scratch $25,000, a lot of cushion when you're trying to develop new drugs. Let's take a closer look at their operating expenses for the year. This part is important in order to figure out where the money went. Consulting fees came in at roughly $1.1 million, and it was roughly $400,000 last year. It seems that's where a good chunk of their money went. They paid $2.4 million in salaries, a big increase compared to the year before. It seems they spent more money on workers and consultants. General and administrative costs were roughly $260,000. Professional fees were about $500,000. They are keeping expenses tight but are still bleeding cash. They are currently in a dispute of about $367,000 with Olimbec. Now let's talk about some risks. The report is full of warnings about the uncertainties of their business, as is standard for SEC filings. One of the biggest risks is the company saying it needs lots more funding. It is not a matter of wanting funds, but needing funds. If they can't get it, they might have to stop or reduce operations. It is vital for companies to have adequate cash flow. However, in this case, this is a risk factor which further increases the problem mentioned earlier, which is the going concern and the question of the company to continue. They are also depending on outside companies to conduct their research and manufacturing. If these companies don't perform well, BetterLife could fall behind and thus make it more risky for it to continue. The success of their products depends on customers wanting them. Even if the product is safe and it works, people still need to use them. Protecting their ideas and patents is very important to BetterLife, and if they can't, other companies may just use the technology that BetterLife has made. Since the company is located in Canada, it may be difficult for shareholders to sue the company. Their stock is traded on smaller exchanges. This could mean the stock price can be highly unpredictable and can result in shareholder loss. Because they need to raise money, they might sell more shares. This makes existing shares worth less or changes the value of their existing shareholders. They aren't paying dividends either. All of these risk factors make BetterLife Pharma look like a very speculative investment. So what does all of this mean for BetterLife Pharma? On the plus side, they are focused on developing treatments for mental disorders, a growing area of need. Their focus on second-generation LSD derivatives and interferon-based technologies could be a breakthrough, and they are trying to keep costs down as much as possible. However, there are some big downsides. They are burning through cash, their losses are growing, and they might not be able to continue without more funding. The risks associated with drug development, reliance on third parties, and the uncertainty of market acceptance make this a very risky proposition. Furthermore, we noticed a high increase in consultation fees and worker salaries and expenses, which is fine but does not seem to have translated in increased financial figures. And worker salaries and expenses, which is fine but does not seem to have translated in increased financial figures. Overall, BetterLife Pharma is a high-risk, high-reward situation. If their drug candidates succeed, the stock could soar. But if they run out of money or their drugs don't work, investors could lose everything. I would probably steer clear. Alright, that's our breakdown of BetterLife Pharma's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.